This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. More knowledge, more wealth on AM 590, The Answer. Now here's your host, Gabriel Shahin.
Good day. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. Now, I'm a principal of Falcon Wealth Planning. We are a registered investment advisory firm, folks. We do investment management as well, but we really focus on comprehensive planning. That goes over where you are today, how retirement looks like, talks about taxes, investments, insurance, estate planning. Folks, you name it. Anything that involves a dollar sign, we can help cover. Give us a call if you have questions on this. We can help. And we are offering a free financial assessment where we'll offer 1 to 2 meetings, 1 to 2 hours of our time at no cost. Just reach out. We'll be happy to help. We can answer the questions that you have, especially during this turmoil that we currently have. And folks, we help people all across the country. Our phone number, 855-963-2526. That's 855-96-FALCON, like the bird. We'll be happy to put together a personal assessment to help relate this show to your specific situation. Now, look at what's going on in the stock market. I mean, we got high interest rates, we got inflation, we got the Feds just raised rates another 75 basis points on Wednesday. You have the market dropping 1,000 points a day, 2, 3, 4%, depending on the indice. You have entering a bear market currently. Man, there is a lot to be annoyed with, a lot to be nervous with, especially when you look at what's going on with Russia and Ukraine, and that not ending well for Ukraine for what it currently looks like. My point to everybody is people are not feeling really comfortable. You're not feeling confident. I had somebody at the gym the other day said, I lost $500,000, $500,000, and I'm going in the market. He's making fun of his advisor. I was like, well, you know, what are you invested in? How long you been invested? What's your time horizon? He's like, oh, they know when the market's dropping. That's what they were saying to me. If I knew, I would sell everything, just rebuy it. I wouldn't even do this for a living, but nonetheless, you can sense the frustration. You can sense the scared nature of the whole thing. And this is where we are right now. People don't have strategies for these type of jobs. I had another prospect that was meeting with us, said, guys, you know, I think I'm just going to buy an annuity. My local bank, their advisor is telling me the best thing to do is an annuity because I won't lose money and I could still get market return. I'm like, what? Is that what he's telling you? That's not true. That's not how it works on an annuity. My point is now is the time you're being marketed to by these insurance companies, by scammers. I mean, you think about this, gold is down, Bitcoin and digital currency is down, bonds are down, and the stock market's down, and real estate, where a year ago you can get a 3% mortgage, now you're at about almost 6%, 5.5% to 6% on a 30-year mortgage. Real estate's going to slow down with this. Naturally, a $600,000 home now costing you an extra $1,000 a month with what's going on here. People can afford less. And that's in addition to all their other expenses going up, like oil and gas. Man, we are in a unique spot right now. U.S. markets are falling into bear markets, which means drop 20% or more. You have NASDAQ that's down over 33, 35%. You have international markets also down. It seems like nothing is making money. So what to do? This is scary, right? You have to look at your situation. You have to look at your money. If you're still working, shut up. Continue to save and contribute. You're buying at a discount. If you liked it 6 months ago, you should like it now. Is this the only industry in the world where we get upset when there is a sale, when there is a discount? Think about it. You go to Costco and it's 20% off. They give you $2, $3, $4, $5 off. Or you buy a laptop that was $1,000, that's now $600 because they give you $400 off. Are you complaining? No, you buy the dang laptop. You get what I'm saying? It's on sale right now and you're complaining and you were happy 6 months ago. I get it. You have lost money. You see it. It's not like you're buying something you didn't have that's discounted. But do you really have it? Is that really yours? I mean, yes, it's yours. You can liquidate it any time. But you have to understand when you need the money. If you don't need the money now, how important is it really? There should be a subset in your portfolio that you need now. That's whether it's emergency or you're living off of it. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. Right now, I'm talking about the stock market and people freaking out. That gentleman that had $2 million that now has $1.5 million because they lost $500,000, they guaranteed that loss. And that money, you don't need all of it today. So let me ask you this. Do you think in 10 years from now, the stock market will be higher or lower than now? Yeah. If you think it's higher and you're rolling your eyes, answering that question in your head, not daring to answer it out loud, then what are we talking about here? Why are we freaking out? Seriously, guys, what's the issue? There are risks and rewards to investing, right? What's the risk? Losing money, right? When you invest in the stock market, you lose money is the risk. But there's also a reward. What's the reward of investing? You make money like you did last year and the year before and the year before and the year before. And right? That's the risk. Is losing and the reward is making money. The stock market averages over a 10% return. Last year was over 20. The year before was over 20. The year before was over 20. So think about this. You took the risk. You already lost the money. You took the risk and your $2 million portfolio is now $1.5 million. And now you want to sell? You took the risk. Stick around for the reward. It's like going to a concert and watching all the headliners, or not the headliners, the pre-show people that nobody shows up to. But now the big U2 comes on stage, or Coldplay, or whoever, and you go away and you say, see you later. What? Just because the bad performances was in the beginning, it doesn't mean the main event's going to be bad. You get my drift? Stop overreacting. You've seen this movie before. We've had this happen dozens of times in our relevant history. Great Depression, you know why we had the Great Depression? Because of the Securities Act of 1933 and 1934. Why is that relevant? Because people were just lying about their company making money. So I'm not even going to acknowledge those losses. But even if you take them into an account from 1926 to today, the stock market averages double-digit returns. I don't understand the issue. We know that companies are in business to make money. We know you're working to make money. So you're proof of capitalism, by the way. You're proof that your job is to make money. Your goal is to buy things, and you have to work to get the money to buy things. Don't get me started on government handouts. But you get what I'm saying and where I'm going with this. Stop getting emotional about it. Something happened during the COVID era, and everybody got so sensitive and emotional and erratic. And you've seen it from how people are driving. You're seeing how people are behaving, acting, and reacting to simple things where before it's like, dude, calm down. I just said you messed up. Like, I'm not allowed to say you messed up. You are all of a sudden not allowed to make a mistake. My point to you with an investment, don't make mistakes in your portfolio. This could have massive ramifications if you continue to do incorrect items. That's number one, selling while you already lost the money. And number two, buying a product like an annuity or some junk insurance product or being conned into something of putting your money in a safe haven. You cannot afford to do that. You cannot. And this could be an irrevocable decision. Times like this separate the rich and the poor. Don't be the poor. Please. And if you need help identifying the right thing to do, whether it's with your real estate property, whether it's with your business, whether it's from your investment portfolio, folks, that's where we come in. And we are offering 1 to 2 meetings, 1 to 2 hours of our time at no cost. Take advantage. Now is the time with rising interest rates, with the Feds just moving up the basis points through prime and so on of 75 basis points at Fed funds. Now is a time with inflation continuing to outperform what they wanted, which is not good. Inflation is going higher with gas prices at all-time highs, with wars in Ukraine, the stock market dropping, crypto dropping, bond market dropping as interest rates are continue to go up, which I addressed in previous episodes. Now is the time to act. What in God's name are you waiting for? Are you just holding onto your portfolio, letting it lose and just saying, oh, it will rebound back? Now is the time to act. And when we come back from a break, I'm going to share with you things that you should be doing and things that you should be avoiding, where people are not doing the right things. And it's crazy. Listen, it's great for business, you doing the bad things, because eventually you're going to say, what am I doing? And go seek help. And that selfishly helps us. So let us selflessly help you. I think that is the key attribute right now, is so you know a trusted partner. You do it yourself, that's fine. But give us a call if you need help. This is what we do on a daily basis. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We can help put together personal assessment to help relate the show to your specific situation. Folks, we're going to take a quick break. We'll be right back after a few words. Stay with us. Welcome back, folks. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth here on every weekend, talking about all important topics of personal finance. Our goal is truly to give you the knowledge you need to increase your wealth. And right now, the knowledge is to relax with this stock market. I'm not trying to say just be happy sitting here in acid rain to get melted on. I'm not saying do nothing. Don't get that twisted. But what I am saying is your action shouldn't be to react to what already happened and go all cash and secure your losses. I know people that had $2 million in 2008 that lost money and at the bottom of the market of 2009 went into cash. And they still had 2 million. Granted, they had more than that. They had about 3.5 million, but they went into cash of March of 2009. And to this day, or I guess I should say up until like 2 years ago, they were still in cash. It's absolutely crazy. They've lost millions upon millions upon millions. That $2 million would have very easily been $10 million. And it's eating them up inside, and it's literally killing them. My point to you is don't be that person. Don't be also too proud to get some help, especially when it's easy. Especially when our headquarters here in Southern California, we have multiple offices across the state, plus in other states, and we help people nationwide. This is something that we can help with. You need help from somebody, whether it's us or somebody else, please talk to a fee-only, non-commissioned, true fiduciary advisor. A fee only is the best one. Those are the ones that don't have the licenses to sell you junk for commission. It's extremely important to make sure you make the right decision, especially when things are irrevocable. When you go into cash and the market rebounds back up, whether that's in a month, a quarter, a year, or 1 decade from now, the point is you do not want to make that mistake. And I've seen it happen so many times. And that's why I'm saying it with so much confidence and conviction, because I've seen this movie before. I've seen all these movies. Even since I've been in the industry for almost 20 years next year, I've seen more and I've studied more. Now, you may have lived more, assuming you're 50, 60 years old, and I respect that. Don't get rattled when you know the ending of the movie. Seriously, who cares what Michael Myers Halloween movie you watch or Friday the 13th movie or Freddy Krueger movie. You get where I'm going with this? You know the ending, right? Especially if you've seen it before, right? Do not fear these markets. Look at it as opportunity. What I recommend that you should be doing, depending on your portfolio and how you're currently invested. I don't know how you're currently invested, but you should be looking to reallocate your portfolio on some of the most suppressed indices that are out there, such as tech, such as mid caps and small caps, such as emerging markets and international developed markets. You should be looking at value exposure as well, because large caps, all the indices has growth and value. You should be looking for exposure in both. You should be buying into a globally diversified portfolio. That way, buying what's suppressed. That is so crucial to your success. I cannot emphasize that enough. Most people do not do that. They're buying individual stocks like Tesla. And hey, I own a Tesla. I love Tesla. Elon Musk is a genius. I believe in what he's doing. But my God, it was overvalued. But they're making 5, 6, 700,000 cars a year, and they're valued more than every car company combined. Are you insane? As an investment, see you later. Good luck. I'm happy you made all that money on your portfolio. Good. I'm more happy with sanity. And there are times sanity doesn't make you more money than insanity, but I lose less. And academic data proves that for every one you get right, you get 5 wrong. I don't like losing. I'm just a bad loser. I'd rather not as win by much. I'd rather win the game by 5 to 10 points versus win the game by 40 and 50 points. Because I'm still going to get more trophies with that, especially if there's more consistency and you don't lose as much. You get where I'm saying? This is where people need to reevaluate what they are doing. This is the time. If you're not happy with your performance, if you are losing the same amount or more than half of what the market's dropped, the market's down 25% and you're down over 12%, you really need to get a second opinion. You really need somebody looking at your portfolio. It's extremely important to do that, folks, and we can help. Give us a call. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help put together an assessment that helps relate to the show to your specific situation. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. We are talking about this volatility in the market, guys. As you already know, there's been 1,000-point drops, which is about 3%. There has been upsides in the market as well. We've seen recoveries, especially when the Feds announced that they're raising rates by 30 or 75 basis points. But we've seen the market hit 20% drop on the S&P 500. That's not including the NASDAQ that was down almost 35%, over 1/3 they were down from its high. I mean, these are serious things that are happening. But what you need to know, it's not uncommon. What you need to know is not to be so heavily invested in a tech industry that could take, just like what happened in the dot-com bubble, that could take 14 years to recover just to where you were before. And most tech companies do not pay out these dividends. So you literally have nothing to live on. You have to be strategic and you have to be smart. Do not chase yield and do not chase these, I call them borderline fabricated and unethical sales practices. Some of them, in fact, are fraud. And the other side of it are just purely unethical, as they're trying to sell you something without you not reading the full disclosures. On an annuity, annuity sales go through the roof when there's volatility like this. This is where you have to be smart on that. You took the risk when the markets dropped. Don't give the reward up. Don't give it to somebody else. So when you take the risk, you don't sell then, because the reward is coming. And by putting your money into an annuity in a situation like this is a terrible idea. I mentioned earlier in the previous segment, this is the only industry in the world where people get upset when sales happen. It's crazy to me that you get upset that things are at a discount. And I understand the emotional tie to it. But if you're not needing all the money now or within the next 10 years, if you're not planning to liquidate it, all of it, then don't sweat it. And your portfolio should have been invested in a way that always has you access to money in 1, 3, 5 years, no matter what happens to this market. The problem is I don't see people that did that. People get greedy, which is normal. As Warren Buffett says, when those are greedy, that's when you actually should be fearful. But sadly, that's not the case. Now, frankly, when those are fearful, that's when we're greedy. Also, what Buffett says, that's the time when people are freaking out, like now, by the way, is when you go aggressive. That is necessary to the success for you financially and your sanity. By understanding and depending on how you're invested, if you're invested in these EV companies, some of them that are out there like Nikola that turned out to be fraud, or Rivian, or Lucid, that's just, they're not making money. And I don't know how long they'll be able to get supported if the rates are the way they are. I mean, people won't be able to refinance their debt. There are some things to be fearful. I'm not telling you to go sell it. I'm not trying to cause a panic. I'm just using that as an example. And there are many examples of companies like this. My point is, stay diversified. My example I said earlier, you don't need, and listen, of course I want 1,000% return on my money. What are the odds of that? We literally can think of them in the past 25 years. Apple, which by the way dropped significantly. So if you were an original investor in 1980, wasn't as good as being an original or an investor in 2003 or 2002 or 2001. Amazon, and now Tesla. I mean, these are some of the bigger names. Google, which really IPO'd at what, 70? And and what are they now? 2,000. So you didn't get 1,000% return, but you sure did well. Same thing with Facebook. They IPO'd at what, 40? What are they now? 300? You know what I'm saying? You just got to be careful and strategic on this, folks. And don't go chasing yield on the hot flying stock. Don't do it. You're going to lose. And we can help make sure that you're doing the right thing. This is the time to address the portfolio while everything is down. That way there's no bad move that you make, because if you sell something at a loss, you buy something else at a loss and possibly at a better discount, at a better valuation. Don't fall into the tech bubble trap like people did 20 years ago. Be careful, be strategic, be smart. Sometimes the best way to be smart is stopping and asking for directions when you're lost. That's what we're offering. That's what we would like to help with. Let us be your financial roadmap. Let us be your financial help. We do this, no matter how great you are or were, we do this on a daily basis, folks. We are offering a free financial assessment that we charge normally for this, but we are offering 1 to 2 hours, 1 to 2 meetings of our time at no cost. Folks, give us a call. We'd be happy to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help relate the show to your specific situation. We would love to help. This is what we do. We've seen this before. If nothing else, we'll give you some advice of where you are today, what retirement looks like. Talk about taxes, maybe give you some low-hanging fruit there. Most advisors can't help you with that. They say you need to speak with a tax professional. That's what we are. We are tax consultants, tax planners, investments, estate planning, insurance, folks, you name it, anything that involves a dollar sign. Even though we don't sell insurance and do trust, we pride ourselves as being specialists in those areas. We'd love to help. Folks, that was a fast show. We appreciate you tuning in with us this weekend. You can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We'll be happy to help to relate this show to your specific situation. I want you to have a great weekend, have a great week, and God bless.